We were down 6,000 earlier in the day, but now we're up 200 because the market continues to storm back on any dip since the Fed is raising rates by less than expected. The prices have gotten above the 200-day moving average. Inflation is falling. The market's 20% off the highs. Well, it started that way in 2023. So people are trying to buy all dips, it seems. So where can we get some more market exposure without taking the risk? We already have 200,000 in debt. So where can we safely add leverage to increase our estimated income, but without shaking the portfolio up too much? So we make $95 a year, and JEPI monthly, it pays us $138 per month. And I say we get that up a little bit because JEPI is a high quality fund that's down today, 0.6% today. We'd like to fill the position out to 20K, and we're still down overall on the position slightly. So you always add to things when you're at your cost basis, slightly above or definitely below. So we're not too far. Well, we're actually below our cost basis on JEPI. So we'll add 2,000. It has an 11.5% dividend right here, paid monthly. So buy, preview, place. So now our income should have gone up by about $200 because 10% times $2,000. And our available for withdrawal wasn't affected much, or our purchasing power, because JEPI is a low maintenance name. It's such a high quality equity that it has a low maintenance, 30% maintenance. You can go see past videos on maintenance. I will not link it in the description below. You can go find it yourself. I don't feel like it. So if you have the burning desire to learn about this stuff, you'll go search my wall and binge watch all these videos. I'm not gonna just do extra work for the sake of nothing. I'm not getting any views on these videos because the algorithms don't know how to pick it up, or I have a lot of competition with other finance people who, by the way, just want to fear monger all the time. If you go to Meet Kevin's channel right now, he's saying the Fed and the economy in crisis. You know, he has like 10,000 people watching on his live stream, and every day he's saying this. Yesterday, or the day before the Fed announced, he said upcoming on his live stream, Fed announcement disaster, and they hadn't even announced. So this is the kind of stuff that's, being passed around on YouTube, and I can't stand it. So I'm just gonna give you my straight numbers, up $653 today, which is nothing. We made 14,000 yesterday, and 12 the day before, and 10 the day before. See my past videos, and there's no reason to ever feel bearish or gloomy or fearful. You just buy all the dips. You see how I bought JEPI today on the dip? I mean, I had purchasing power of almost 700,000. Did $2,000 really affect it? No. Okay, and so yeah, my margin debt's up to 202. I'm gonna sell a put someplace, I believe, so that I can knock that down. So KWeb, let me look at KWeb. Remember, this video is about JEPI, but let me just figure out how I can perhaps lower that debt that I just put on from JEPI. So I would do KWeb, but it's up about 100% from the lows here, so I'm not gonna sell a put on that one yet. I can always sell some other things in my account to lower that debt. But also, I don't want to sell. Why? The Fed raised rates this week by 0.25. That took our margin from 5 to 5.25. That's negligible. You can't even tell the difference. So JEPI continues to be down. Let's do the test for JEPI, the $10,000 test. So JEPI is a new fund. It's not going to have as much history built into it. But from 2019, it went from 10 to 18. That's pretty strong. And as you can see, it's kind of bottoming out here. So that's why we're adding to it. It's the last one to take off before the train leaves the station, in my opinion. So we like JEPI. It has a lot of assets under management. If you go to Seeking Alpha, you see there's a lot of positive commentary on it. I don't even have to read these. JEPI versus Schwab dividend, which is a better ETF. Look at all the comments here, 374 comments, because a lot of people go for these popular ETFs, JEPI and Schwab, but they don't move anything like the cornerstone funds. So as long as people are saying that nothing's blowing up in here, you can generally assume that JEPI is able to cover its dividend, which is all that I care about, because 10% times 10 years is 100% payback. So you don't care about the prices up or down. You just care that in 10 years your asset is cash flowing, whereas in real estate it took 15 to 30 years. So JEPI passed the Morningstar test. It made almost a double of your money in a short amount of time, as you saw. It's still cheap. Look at it on a chart for the year. As you can see, the market's taken off, but JEPI has not. And that's probably due to the fact that it sells calls. So when market's spiking, this fund won't move as much because it does sell calls. So that caps some of the upside gains. But it is designed to move from the lows. As you can see, it moved from here from 50 to 55 in October. And if you go look at it on a 5-year chart, it does move from lows to highs. See, 2020 to 2022, it went from 50 to 62. So that's, you know, over 20% gain there. Plus it was yielding a 10% dividend. So that's what you want to see. It participates and goes up with the market and stays stable on the down days and kind of generally moves sideways on other flat days. Whereas something like Cornerstone, CLM, which is our favorite investment, it goes sideways to down, as you can see. But this needs to be studied closer because this is due to its rights offerings and its DRIP program, and there are special factors that make at work, special factors at play that make Cornerstone look like this on a chart. It's designed to go sideways, but JEPI is designed to appreciate with the market, not go up terribly with the market because it sells calls, but it appreciates slowly, as you saw by that chart. So that's why we added to JEPI. It's a top fund. You know, we wanted the position up to 20, so we have 1,000 more to add to it. So on any further dips today, we'll look to add to that. We could always sell some other things to lower our margin when we add to JEPI, but why when interest rates are so low? Get ahead in your life. Take advantage of low rates and a brokerage account. And these dividend names that are cheap, like JEPI, you see how it's cheap. It's still considerably, it's still way off its highs, a considerable amount. Look, it was at 62 and it's at 54. So you have, you know, almost 10 points up of upside, plus you have this dividend. So this is why you should include JEPI into your portfolio. It should be one of the many holdings to diversify. You can put a little bit more in this holding because it's safe and it matches the market more so than, let's say, a Cornerstone. Cornerstone is up today 1%, and that's how it works. The premium moves big in Cornerstone because it's a 4-star fund. But it moves differently than JEPI, and more people are comfortable with a vehicle like JEPI because it's more predictable. The stock goes up slowly, it goes with the market, and it doesn't do rights offerings every year like Cornerstone. Rights offerings are just nothing more than a scare tactic to keep people out of Cornerstone when the public says rights offerings, but it's actually just an opportunity for them to telegraph when you sell your gains and reload at the bottom. That's why I love Cornerstone. But JEPI, you don't have to worry about that stuff. You just buy it, hold it, and forget it. So, and collect the dividends. Just buy on the dips like I'm doing here. So I hope you enjoyed the video. Stay tuned for more. Thanks.